All right, here we go. Looks like we're going live. Hey everybody, welcome. Good morning. I'm Rob Booker, best-selling author of Adventures of a Currency Trader and Trading by Faith. Happy Tuesday. Feels like a Monday, but it's a Tuesday. I'm glad you're here. We've got some stuff to look at, and I want to jump right into it. So let's take a look at MetaTrader. Here's this Swiss yen trade that I've been telling you about and that we've been looking at. And it's currently better than ever and ready to close. So I'm going to close this trade with you here and do that right now. So I'm going to click here, close the trade, $1,700 win on that one, $77 win on that one, and then the final trade is a loss because I started this whole thing off really early. And there you go. So those trades are closed. You might have watched the broadcast that I did on Sunday, and I talked about the fact that I start positions off, I let them go wrong, and then I add to those positions. And I think that you can't really know what direction you should trade in. Okay, that's not what I meant to say. You can't really know what to do about a trade until you've taken it. And there's something about opening up a small trade and just letting that trade go wrong that is absolutely spectacular. And by letting it go wrong and having it be a really small sized trade, you allow yourself to learn what it is you want to do about that trade and picking a direction. And that's exactly what we're going to do in today's broadcast. So welcome here. Glad to see you here. I've got the chat window open here. So if you're watching live on Periscope or YouTube or Facebook, say hello, tell me where you're from, say hi. Javier says hello, so we know it's working and we know that I'm here and we know that you're here. Today what I want to do is start things off and let you know that finally I'm ready to launch this brand new class that I've been talking about, which is a brand new class about price action and trading, not reversions to the mean, but trading breakouts. And I'm going to talk a lot more about that over the next few days, but I want to just jump right into the charts today and show you exactly what I have in mind. So without further ado, what I'm going to do is set up the picture-in-picture so that you can see what I'm talking about. And I got that ready. And then let's take a look at the charts. Okay, this is the Swiss yen trade. It was bearish divergent and it dropped all the way down to the yearly pivot and the monthly pivot that we said we wanted it to get to. I don't have anything more to say about that. I don't think there's anything more interesting to say about that at all. And so I'm going to remove all the drawing tools and I'm just going to say thank you very much. Swiss franc, Japanese yen. And we'll be looking for the next trade. Okay, Australian dollar, Japanese yen, US dollar, Japanese yen. That looks interesting. British pound, US dollar. Okay, here, this is interesting. So what I've been looking for lately, and what hopefully you'll be able to see on this chart, I'm going to pull this up and make this as large as possible. There's a red line running through the chart here, and what I want to do is turn that off. That's the yearly pivot. We don't care about that right now. But what I do want to look at is this green candle that you see right here, which, according to the indicator that I have pulled up on my chart, is a pin bar. Now you might not know what a pin bar is, so let's look at the definition. It's a short, I don't think a lot of us knew this, but it's short for Pinocchio bar. It's a single candlestick setup that clues price action traders into potential reversals in the market. A pin bar is a elongated wick that sticks out from price action. Traders will usually look for one-sided wicks that are 2 times the size of the candle body. All right, well that's exactly what we have right here. This green candle body is a pin bar. And the long candle wick is exactly what we would look for. And that seems to suggest, although it may not be the case, that seems to suggest that there may be some bullish action on the British pound coming up reasonably soon. Now, it's not going to be true every single time. In fact, we can prove that it's not true every single time. This pin bar that's right here was bearish. And then we had a nice drop right away. That's pretty awesome. But then we had a pin bar that was supposedly bearish right here, and it didn't drop. And I'm going to move my face out of the way of this so you can see that. Okay, there we go. We'll go back over here. Okay, so this was a pin bar right here, and price dropped. It was a bearish pin bar and price dropped. But here's a bullish pin bar because it's green, and then price dropped. And here's a bearish pin bar, and then price went up. So I like to imagine that the pin bar, as it's defined on this chart right here, isn't necessarily an indication of direction, but it is an indication of breakout. And that is an important concept to remember, that if it's an indicator of breakout, then we can work with something here. Then we can really do something because it's an indication that price is going to be moving away from, in either direction, away from where it was on that pin bar, way outside the range. And in fact, may fill the wick area. And let's show you an example of what I mean by that. So with this pin bar here, this red one, we filled the wick that went up. So this giant wick went upwards, and then we filled that wick that went up. And with this pin bar here, we dropped. And we didn't fill any wick, we just went in the opposite direction. We broke out beyond that candle's body and we fell. And in this pin bar, we printed the pin bar in green, which was supposedly bullish, but obviously this pin bar doesn't know bullish from a sack of coal or a hole in the ground. And then it fell and it filled this bar's area. And this one right here, it was supposedly a bearish pin bar with a really elongated wick or shadow below the candle. And now there's a bearish candle forming. And it looks like this bearish candle is forming and filling up the space that that wick had below. And I want to use either spot FX or shares or even options, vanilla regular options or binary options to make a trade based on this kind of price action. And I want to do that during live broadcasts that we do right here. And I want to have a really inexpensive class that I teach that's connected to it so that everybody that's watching can participate in that class. If you're a lifetime member, of course you get access to that class for free. And over the course of the next few days, I'm going to set up the pages for that class and set up everything that's ready to go. And I'm going to make it so affordable that even a caveman could do it, or everybody could do it, and we'll get to that in a minute. But what I want to do now is not scan my computer for whatever, thank you very much. I want to look at a few other currencies, and I want to see if any other pin bars are showing up on the charts. That's the Euro, US dollar, Canadian dollar. So I think we've covered most of the ones that I would look at, and the only one that I really saw was the British pound. Okay, let's pull up the, so dollar yen, dollar Swiss. So we could look at the dollar Swiss. Ooh, look at how bearish that is. Holy smokes, look at that dollar Swiss. Look at all that bearishness. Oh, delicious bearish movement. Ooh, look at all these bearish Knoxville divergences. So oftentimes the first bearish Knoxville divergence will be a failure. It won't work. And then you'll get another one and it won't work. And then you'll get the third or fourth ones, and those will be totally awesome. And that's what's happening right now. I'm going to move the chart over so you can see that even though my face is up there on the screen. Wow. Okay, so what I want to do is pull up these options. I want to pull up the dollar Swiss ones. I think by the end of the week, we may drop, and maybe substantially, down to the weekly pivot, down to 98.90. Is there anything really inexpensive here? 98.75. That might be reasonably inexpensive. Risk 16 to make 83. Risk 33 to make 166. Risk 50 to make 249. Risk 67 to make 333. Seems reasonably awesome. I'll zoom in on this a little bit so you can see these contracts. So these would expire at the end of the week, the 3 days left. Wow, 99.25. I could sell that one. Well, that's not really worth a lot. Yeah, because the price could still go up a bit. Yeah, you know what? I'm gonna sell one of these 98.75s. It's a little bit more expensive than what it was when I just told you about it, but that's fine. Risk 19 to make 80. So we'll take one of those right away. Okay, the next thing that we're going to do is, now that I've got that in place, there's no pin bar there, but there's lots of bearish divergences, and if we could see a pin bar somewhere, that would even change what I think about this. Look at that. Pin bar that was bullish did lead to bullish movement, and then this bearish one led to more bullish movement, but at least it meant that price was moving and breaking out, which is exactly what we want to see. Oh, I love that. Hey, everybody, how you doing? Tony says hi. It's Real 307 says hi. Gosia Emska says hi. Solomon Pankrat says hi. Hi, Solomon, nice to see you. He says, love your honesty. Hey, Solomon, thanks, appreciate that. Mark says, hey, Rob, Mark in SoCal. I was just having a dream last night about Southern California. Shane says, hi. JB says, good morning, Rob. Johan from South Africa. And, oh, so many of you are hanging out. Nice to see you here. Thanks for being here. If you're on Facebook, say hello. I'll catch you later. Now let's do something a little bit even crazier. Let's pull up the pin bar indicator on the really short-term charts. So we'll pull up indicators, favorites. I love this Chris Moody price action pin bars indicator. And what we want to do is show pin bars and turn checkbox, turns bars to gray. Okay, so all the other bars are going to go gray and we're just going to see the pin bars. Let's run through the binary. I need to make up. Yeah, there we go. Let's see if there's any pin bars on these 5-minute charts. I mean, I doubt we're going to find one. Oh, the Australian dollar's printing one now. Could it end up being one? We'll find out later. Euro US dollar, Euro yen, pound yen, dollar Canadian. So look at that. This is an example of what I might do. If I see this pin bar right here, I might go long a binary on the short-term charts that could benefit if price goes up, and then short another one that benefits if price goes down, which is exactly what price is doing. Let's see if there's anything that I could trade on the short-term binaries. What do we got? 2 minutes left. It's probably going to stay low. It's probably not going to go below 29.76. No, I don't want to scan this. Stop asking me, computer. All right, there's nothing here that I could trade. Oh, that would have been a great one. Gosh, that would be really enjoyable to be able to grab a hold of that one and just let it rip. Hey, we might wait here until the end of this candle. Let's do one trade together today. We're just going to do one trade together today. And don't forget to say hello. Don't forget, if you're watching and you're not subscribed to the YouTube channel, go to youtube.com/RobBooker and subscribe to the channel and click that bell and you'll get notified when I go live. If you like my page on Facebook, or you are a follower of mine on Twitter, or if you are a YouTube subscriber, every single day this week and next week at 9 a.m. Central Time, I'm going to go live. I'm going to take some trades. I'm going to teach you something from the whiteboard, and we're going to have a bunch of fun. So don't forget to join me. Don't forget to subscribe. And remember, that class is coming, and when the time comes, I'm going to ask you to participate and come on board in that class. Okay, let's take a look at the candles here. 2 pin bars in a row. No one has ever seen this. I'm in a good mood, obviously, because I just had that big win in the trade copy account, the international trade copy account. That was a really nice. Win. We held on to that Swiss yen trade for a long time. That's not easy for me to do. Sometimes I have to pretend that my winning trade is a loser. That way, I hang on to it for a longer period of time. You know, what do you want from me, people? Okay, if we're going to get another pin bar here, we're going to get a beautiful bean footage trade. Okay, so what I'm going to do here is pull this off to the side so you can see that very nicely. I know that my face is in the way here, so I'm going to change the way that I set the screen up, and we're just going to get rid of my face. Nobody cares about my face. There we go. Face gone. Face eliminated. Must eliminate face. Anybody here ever play Fallout 4? Somebody recommended that to me the other day, and I was like, I'll try it out maybe. Okay, here are the contracts next to the chart. Okay, we have a new contract. We want to have something that wins if it goes up, and we want to have something that wins if it goes down. So we want to get as much out of this as we can. So we'll do one of these. Oh wow, it's 29.73. That's too far down. It's never going to get that far down. And then one of these if it goes up above 29.93. I mean, that would have to move a lot in 5 minutes. But at least we've got some, at least we got a couple trades open here. Oh, we didn't get the bullish one, did we? 29.78? Oh yeah, we did. We got it. It opened. Okay. So we got a couple trades open here. So 4 minutes and 3 seconds left to go. As you know, what I like to do is trade out of the money binary options, or we could take this trade based on the spot Forex market, of course. But with a binary option, what I like about the way that this works is I have a very defined risk. I've risked a very small amount of money in exchange for what is a great risk to reward ratio. And I would never be able to have that kind of a risk to reward ratio on the spot market. It just wouldn't be possible. With 3 minutes and 30 seconds left to go, we'll see if this comes out all right, and if it doesn't, that's fine. We'll be back tomorrow. What I would like to do is then jump on over here to the big board in the office and teach something that we might benefit from all together now. So one of these, because I paid so little for each of these, one of these ought to be able to go into profit. Maybe possibly. While we're waiting here, we might show you some of your comments on the old chat box. Looks like the Facebook chat didn't work. Messiah's here from Lagos, Nigeria. Nice to see you here. G'day from Sydney says A Long. Martin Ball says hello. Code Slavmanila says hello from the Philippines. Legal Lee says hi Rob. Cad Tech says hey from Paris. Bonjour. Anis Ahmed says hello from Dubai. Do Dubai for a holiday and maybe do a seminar here for the region. I would love to. If you can help me set it up, that would be great. Look at this. We have a profitable trade on the bearish one. Wow, that was profitable for a moment by $10. What in the world? Let's put a limit order on this bad boy. Spend 85. I would take 72. Can we get some profit out of this one? Two minutes left to go. We need this to drop a bit more for that to happen. Well, that was temporarily nicely profitable. I think the trick here is to spend as little as possible, and we'll talk a lot more about this inside the class. But the idea is to spend as little as possible, which I want to do over here on the whiteboard when we come back. Let's watch this trade. I don't care if this is a winner or a loser. We're going to have a great day today. Don't you think we're going to have a great day today? Feels like it's going to be a great day today. All right. With 1 minute and 34 seconds left to go, we got to have a pretty significant drop here in order for the 29.78 to be a winner. What are we trading at? Now, we're pretty close to 29.78. It's not that far off, right? I mean, 29.78 is only right here. You can fall below that. You're totally, do that. That's right, you little dollar Canadian. There we go. Go profitable. Go profitable. Go profitable. With 1 minute left to go. Looks like this may be in the dog. Oh, go. What's the indicative price? 29.79. Oh, come on. 44 seconds left to go. Just drop. Just tank. Oh, do it. Oh, that became a win. That's a win. Now, it's a small win. It's a small win that, okay, that was small, but it was delicious. What happened is the win was 13, so I won 13 and I lost 7 on the one that I bought. So the difference was really small, and it's a really small win. But I got to say, I'm still pretty happy about that. Let's jump on over here to the big board, and let's talk about the price we pay for the things that we do. All right, welcome. I'm going to move the camera around, say hello to Conroe, Texas, and Lake Conroe. And what we're going to do here is back the There we go. Yeah, that's perfect. Okay. All right. Oh, that's right. You just decide to go off right now. Isn't that exactly what happens sometimes? All right. So there's a few ways to think about trading. And one of the ways is to think about trading in terms of probability. And Robert Miner wrote a book called High Probability Trading. And the goal of a probability-minded trader is to have the highest percentage win rate and the highest probability of success on a trade. Usually, if this is the case, and you have all the odds stacked in your favor, and it's the highest probability trade, you have spent a lifetime setting this kind of thing up, and you have very few trades, and they're very far and few between, because they take a long time to set up. And you can believe me or disagree with me or whatever, and that's perfectly fine. But generally speaking, if you're seeking after a high win percentage, generally speaking, these things are true. You have to spend a lot of time building the system and waiting for the trades. And usually, your profit target is small. And the reason for this is that the longer you wait for a setup and the more patiently you wait for a setup, the higher quality setups that you can require. The second thing is, it's easier for price to move a small distance for you than it is for price to move a great distance for you. It's easier to run a short distance than it is to run a long distance. It's easier to run up a short flight of stairs than it is a long flight of stairs, and the market is exactly the same. It's easier to get a 10-point win than it is a 100-point win. And if you disagree with that, then you're Captain America of trading, and God bless you, and you're the greatest person of all. There's another way to think about trading, and that is to be focused on risk. Another way to say that you're focused on risk that I want to talk about is the price you pay. So let's call it your entry price, your entry cost. As Sean Campbell brilliantly wrote about in the book Inventory Trading, everything that you bring into your trading account has to eventually come out of your trading account. And the less amount of money that it costs you to get into the trade in the first place, the easier it is to get out of it with a profit. And the less discerning you need to be about the entry, and the likelihood is that the win's going to be much more substantial. Another way of looking at that is saying, I'm going to take the least amount of risk possible to get into this trade. I want to pay the least amount of money to get into this trade. So when thinking about this with shares or spot trading, for example, you would wait for price to keep dropping. It would drop here, and most people would get in right there and start buying. But if you're concerned with the cost of the trade, you would wait till it drops here, and then you would buy. You would wait for the cheapest price possible. You would be a bargain hunter. That's what you would do. And because you waited, you might miss out on a few bursts upward here. You might miss out on some high probability small movement trades. But when it finally bottomed out, it would have a lot more room to go up. So if you're a trend trader, you wait for the deeper retracements and the best price possible. And it takes some patience. But once you pay the least amount of money possible for a trade, you have all kinds of benefits. You can hold on to that trade longer with more confidence. You can have a larger profit target on that trade. You can ride that for a longer period of time and know that it has more room. One way that I like to look at that, although it's not perfect, is I like to look at the RSI, and I like to get into a trade when something like an oscillator is really, really far oversold, for example, because then it has what I call more runway to move when it finally does move. Now, when I trade the binaries, what I like is, it makes me smile, I get so excited. I like risking like $7 to make $93. I like risking $10 to make $90. And the reason is, I could lose 9 times in a row, 10, 10, 10, over and over and over again, and then with one win, I've got it all back. Now, not only that, what I like to do And as I described at the very beginning of this broadcast with the Swiss yen, I like to take that small first trade. So I might take a first binary trade of 10, and that one's going to be a loss. And then take another one of 10, and I don't care if that one's a loss, but remember my risk reward is going to be fantastic. And then near the end of a trading session, I might take 10 times 5. I might do 5 of these. So I risked 10 to make 90, 10 to make 90, and then at the end, when I finally got a read on things, and I feel like I know what's happening, I might risk 50 to make 450. Now, there's no guarantee, and all trading involves a substantial risk of loss and is not suitable for all traders. And so there's no guarantees here, and some people can just lose for their whole life. But that's what I like to do. I like to get a feel for things and build into a position. Once again, Sean Campbell's book, Inventory Trading, which you can find on Amazon and the Kindle and whatnot, is fantastic. And it's a nice description of how some of that kind of stuff works. Once again, if you're watching on YouTube, hi, say hello in the comments below. If you're watching on Twitter or Periscope, it's nice to see you here. And if you're watching on Facebook, I love the heck out of you. I'm so happy to be here together with you. I'll see you again tomorrow, same time. For every day for a week or so, with very few exceptions, at 9 a.m. Central US time. I'm going to go live. We'll do some live trading. We'll do some lessons up here on the board. And very soon, I'll have a link that you can put your email address into. Probably by tomorrow, I will have a link on our videos, and I'll send out an email, and I'll let you know how to get on the early bird list for that brand new class that I'm going to teach. And everybody on that early bird list is going to get into the class for, like I said, like 20 bucks. And then later on, I'll sell it for $200 or whatever. But for the group of people that's on that early bird list, I'm just going to put it on sale. And then I may never sell it again at all. I don't know. I don't really care. I want to be paid for my time after I do all this free stuff. But I just, you know, modest investments are fine. I love you all. I just said pay the least amount of money possible, didn't I? So that's what we're going to do. Can't wait to see you again tomorrow. Thanks for being here. If you liked the video, don't forget to subscribe. That helps me out a ton. On YouTube, we're almost at 15,000 subscribers. That's my goal. Could we get to that goal this week? Hit the subscribe button on YouTube. If you're watching on Facebook or Twitter, go to youtube.com/Rob Booker. That helps me out a bunch. I love you all. I'm really going now. Bye. I'll talk to you soon.